Welcome back. OPEC and non-OPEC members are concluding their two-day meeting in Abu Dhabi today. Oil prices are up slightly on the back of reports that Saudi Arabia is planning to cut exports to Asia next month. Brent crude rose 0.5% to $52.58 per barrel in early morning trading. Well, let's get a sense of expectations as the meeting concludes. And to do just that is a research analyst at the financial derivatives company, Didi Agbaho. Thanks for joining us, Didi.
Thank you for having me.
Yes. So, OPEC and non-members and OPEC and non-OPEC members conclude their meeting today. What are we likely to expect from this meeting?
First of all, the meeting is to discuss compliance and discipline among members. From what we can tell from their last meeting in July in Russia until the present one in Abu Dhabi, production hasn't cut back. So there's been a synergy between OPEC members and non-OPEC members to ensure strict compliance to achieve favorable pricing. The likely outcome of this meeting would be stricter adherence to the supply cut and hopefully Libya joining the pact as well. And we're hoping that countries see a need as to why they need to cut back on their supply cut.
But at the end of the day, what will all this mean for Nigeria, especially in the light of the cap at about 1.8 million barrels per day?
Okay, for Nigeria, what that would mean, and we're hoping that the outcome will be favorable, stricter adherence, it's good for us, because the truth is we're dependent on oil. If we look at the price today, which is $52.9, it's the base case scenario for us, and with this, we are able to meet our financial obligations. What that also means is that inflation will be mild, revenues will be positive, they'll be positive, and, okay, for instance, the present economy recovery would also continue. We might not be ecstatic, but we would not be sad. So it's a win-win for us if stricter adherence is applied.
Now, let's look at the oil prices. Now, after all said and done, is it possible that we see the prices fall back below $50 per barrel, just like we saw in April?
Yes, there is a possibility that prices will drop. Come to think of it, we'll be having the higher 40s than the lower 50s. But we also have to take into consideration the average of what the trend has been. It's been 52 to about 54, which is still within Nigeria's budget benchmark. So it gives us that safety of margin to, so to speak, play with. But basically, even if it drops, we shouldn't panic. We should just, because the prices are volatile, so it will drop, it might rise again, but looking at the trend and the average, we're still within safety.
Well, talking about not panicking, just like you mentioned, how can Nigeria possibly hedge itself against oil price shocks?
Like we've always said, diversification, which is on the lip of everybody. But the truth is, the only way we can reap the benefit of diversification is medium to long term. It's not short term. So we need to start to look for ways of achieving short-term benefits. Like we've seen the aggressive tax collection by the federal government. Lagos accounted for 55% of taxes collected by Nigeria. We are hoping other states imbibe these good characteristics. We are also hoping that we block wastages, places where money is just going which it doesn't need. We are also looking to export non-oil products, because the truth is we are dependent on oil and we are not major players in the market, so we don't dictate the price. So for our own good, it's best we start to find alternative measures.
Yeah, I'm sure that one question in the minds of many is that what does all this mean for the domestic commodity market at the end of the day?
If we still have stricter compliance, it's favorable. So what that means is that the Naira is still strong, our reserve is still good. That reduces the cost of importation, So what that means is that we can still do business at a relatively low cost. It's not inflated because prices have not increased. Our Naira is still strong.
Many thanks, Didi Agbaho, for coming on Business Incorporated. Didi Agbaho is a research analyst at the financial derivatives company.
Thank you very much for having me.
Well, we're moving on now to other stories. In South Africa's business confidence climbed to its highest level in 5 months in July, boosted by a firmer currency, falling inflation and an increase in vehicle sales. The South African Chamber of Commerce and Industry's monthly business confidence index accelerated to 95.3 in July from 94.9 in June. It was the highest level since February 2017. The business group says the main contributors to the improvement were made by higher vehicle sales, more building plans passed, low inflation, and higher share prices. And Egypt's fuel subsidy spending for the 2016-2017 financial year ended in June hit $6.76 billion. The country's Minister of Petroleum, Tariq El Molla, says that's more than double the amount recorded a year ago. In June, Egypt hiked fuel prices by up to 50% as part of subsidy cuts in line with a $12 billion three-year International Monetary Fund loan program it agreed last November. With barely 3 weeks of imports left, Democratic Republic of Congo is seeking the help of Russia's second-largest bank, the VTB, where officials discussed a Eurobond to raise funds for the cash-strapped government. Sources say the deal may be close to going ahead, but may hinder any chance of IMF funding. As Congo's government solicited help from Western donors last month to contain a fast deteriorating economic crisis, the chairman of the state mining company brought an unusual guest to the Prime Minister's office. It was Raymond O'Leary, a vice president from Russia's second-largest bank, state-owned VTB, along with another VTB official. They discussed the Eurobond to raise funds for the cash-strapped government. The outreach to a bank under U.S. sanctions and facing further scrutiny for its role in negotiating loans to Mozambique that led to millions of dollars going missing has underscored Democratic Republic of Congo's perilous economic position. It also suggests the possibility of an even harder turn-away from the West by Congo than soaring relations with traditional allies have indicated so far. In a rare moment of bluntness in a speech last month, Deogratius Mutombo, the governor of Congo's central bank, said the economy is in a very bad shape.
Le rapatriement des devises demeure toujours faible.
It's unacceptable that foreign revenues remain low. There has been no progress because we have been living in a situation where we have a shortage of foreign exchange. We thought we would have enough by the second half of the year, but that has not been the case.
Congo is Africa's top copper producer, but its economic indicators are all blinking red. Foreign reserves are down to 3 weeks of imports. Annual inflation is expected to near 45%, and the Congolese franc has already slipped 30% this year, making it the world's worst performing currency. On the streets of the capital, Kinshasa, many Congolese say they are fed up with the current economic situation. How can we live in such conditions? We cannot even take care of our children or provide them with health care or even pay school fees. Most people who live in Kinshasa rent their homes. Right now, I can't even pay my rent. My landlord has not increased the rent, but the Congolese franc has lost its value.
I used to buy my merchandise for $31. And now it has gone up to about $44. If it continues, I will no longer be able to buy. We are doing what we can, but we are struggling. Life is very difficult. Even finding food to eat has become difficult. Let's not even talk about school fees. How can you live like this in your own country? It's not right.
And that's our program today. Thank you for watching. I am Bisi Adebayo.